If it's Thursday, that means it's time to take a look at some legacy stuff, mainly US because I'm biased, but also because the Dixie sort of rules the world, DXY, as far as the reserve currency. And of course, the VIX, the volatility index, and its correlations with Bitcoin and crypto in general. So we'll start with the VIX. If the VIX is up, we're bearish on crypto. If the VIX is down, we're bullish. Historically, anything above 20 to 30 has been super bearish, and the opposite is true as well. The declines in VIX have been bullish for crypto. Even this decline from 80 to 20, very clear trend there that I can see. So to see VIX go from 20 to 0 or 20 to 5 or whatever it likes to cruise at, 15, would be another notch of bullishness, certainly. We'll see if we get that into the new year, 14 days in, and we're still at 22 on the VIX. Two of the most interesting things that I saw, I only look at this stuff really once a week for the most part when I do these videos, but Dixie, the negative correlation is actually coming off pretty substantially in that it was 80-70% negative correlation. Now it's about 25. And gold, XAU, USD, is actually negatively correlated with BTC slightly. Now these are both rolling 30-day correlations. So a bit interesting that we're losing the inverted correlation with Dixie. We're losing the correlation with gold. Bitcoin's kind of doing its own thing. It gets a lot of flack for not beating to its own drum. And, you know, on the right side of this, maybe that's true because here's the SPX correlation, the NASDAQ correlation. And both of these are 80 to 90%. So we're highly correlated with stocks right now, more so than we are metals or fiat. So these correlations tell me that right now the important thing to watch is actually the stock market. And Dixie feels important and looks important, but the numbers just aren't there to support that right now. I mean, because, you know, I've been talking about the Dixie for weeks, and death of the Dixie is bullish for Bitcoin in a big way. Death of purchasing power of the world reserve currency means people are looking for alternatives. BTC is one such option. A couple things here on the Dixie chart. It is approaching the previous consolidation area from 2018, and really the only area left until much lower. It bounced on the previous yearly pivot. The current year's yearly pivot is at 85. So if we are able to break 88, 90, and move to 85, that's a journey that would take BTC easily between 60 and 100K, most likely, in my mind. Dollar weakness is crypto strength. There was a bit of a bullish divergence here. It's harder to see on this time frame. On higher time frames, it's pretty obvious, but you're getting a lower low in price and a higher low in RSI. There's a bit of a TKC clamp here, so there's plenty of reasons this should mean revert or consolidate a little bit. But overall trend-wise, definitely a stinker. Very bearish here. Alternatively, if this does flip bullish and we go to 94, we should see significant weakness for BTC. Historically, that's what we've seen, despite the current waning negative correlation with BTC. So overall, my outlook on Dixie is still bearish, which is bullish for BTC. I mean, just this is USD-CNY, and this is the weekly chart. It's just been straight down, kind of since it hit 7, kind of since the election. Not really a bull div yet on the weekly, but there are other factors at play here other than just technicals, obviously. But it's always interesting to just look at the technicals in a vacuum. You know what's going on here? It's it's selling off like crypto, really. You know. Here's gold on the weekly. And gold's in a bit of a pickle because it had this massive run for gold over the past 2 years, and it's kind of stalling out now. Whenever I see a big cloud like this, there's always a risk for an edge-to-edge move, much as there was here in 2012, 2013. So what happens is you get your run up, all the while trend is telling you stay long, there's no risk of anything here. If anything, put bids on the Kijun, so if those get hit, you're just adding to your position. As soon as the bearish TK cross happens, you're out of your position. So that's going to happen in the next few weeks, most likely, so long as this stays sideways or declines. So once that happens, then the expectation of this edge-to-edge move goes up substantially, because then you have confluent trend indicators telling you that there is bullish weakness, trend weakening. So I'd be looking at 1600 probably mid-year for gold, which normally I'd say is bearish for crypto, but looking at those correlations, I don't think it really means anything considering the correlation is 0 right now. I mean, that may change over the next 30 days, 60 days, but right now I'm less concerned that gold is bearish than I normally otherwise would be, considering the correlations are coming off pretty substantially. Here's silver. I always like to look at both the metals here. Silver looks actually much better than gold does, interestingly enough. We talked about this white coffee and accumulation, just textbook, spring, you can label it out, blah, blah, blah. Now you're in the markup phase. So this looks pretty ugly intra-week over the past couple weeks, and it's rather trendless because it's just flat. But the expectation here should be bullish continuation, certainly. As long as it can survive anything above 20, I'd say it's probably okay. Here's the S&P, and we've hit new all-time highs a couple days ago, yesterday, whatever it was. And as long as we keep printing money, Dixie should continue to decline, stocks should continue to increase, and with a strong correlation between BTC and US stocks anyway. Despite the gross looking technicals here as far as being oversold with a massive bearish divergence on the weekly, that shouldn't matter at the end of the day if we're just printing more money, right? If we're printing more money, talking about $3 trillion, I think the package is up to now, stocks will just keep going higher. Dixie will go down. I mean, that's just how it's going to be. NASDAQ, not as strong as S&P. I think there's been some rotation between NASDAQ to S&P. Again, multi-week bearish divergence. You're getting higher highs on less momentum. I mean, this goes back to 2020. We haven't had a rise in RSI for quite some time relative to the previous highs. Massive TKC climb here. So all this looks like it's oversold. I don't think any of that's going to matter because of the stimulus. Here's Nikkei, Japanese index, which is hitting multi-year highs. This is the monthly charts. This goes back to 1991, just to show how everything in the stock realm, equities, securities, whatever you want to call them, are just exploding right now. And this is off of a multi-year bearish divergence, arguably. Getting higher highs here on less momentum repeatedly. So if all of these just keep going up and to the right, BTC should really be no different based on how it's acting. Here's Tesla, just to zero in on a few of these. Absolute mega moon territory. This is the moving average multiplier. This is the 2-year MA. This is 3 times the 2-year MA. So it's currently more overbought than it was in 2013 and 2014. And it's just, is it a bubble? Is it a new paradigm? I'm not going to be that guy, but this might be a little hot right now, Tesla. Not really bearish though, which is kind of interesting. But it's always fun to look around at what's going on besides crypto stuff. Bed Bath & Beyond, BTC's up like 700% since March. Bed Bath & Beyond's up 600% since March. So a lot of this stuff has recovered extremely well. A bit of a bear div here. But it's good to see that technicals are still valid. It's above the 200. And it kind of looks like DOT, how DOT sold off and then rebought for new highs. Just looks insane on the past few months for something to be up 600% like that in traditional markets. Kind of strange. Then lastly, this is Facebook. Someone pointed this out to me. Inverted Adam and Eve. Very clean, very textbook. I didn't put volume on here, but I should have. Shame on me. Breaking down below the 200-day moving average. So I'd expect anywhere from 192 to 216 as far as a stab down. But this does not look bullish in any regard. And if the Dems are leading the government going forward here, then they may come after big tech, which is probably why you're seeing some weakness here. If you compare Facebook to Bed Bath & Beyond, it's kind of night and day as far as what's been happening over the past few months. So overall, I'm still watching those correlations, but ultimately correlations with US stocks, global stocks appear much stronger than BTC's correlations with metals or currencies at the moment.